We're at REIT Week 2010 in Chicago, and I'm joined by A&B Property Corporation's Guy Jacquier. Guy is president of Europe and Asia and the private capital group with A&B. So Guy, let's start by talking about your European operations. There's been a lot of news going on in that area. What are you seeing there?
Sure. There has been a lot of talk about what's going on in Europe, and there has been some concern over the economy. Really, from our customer standpoint, really nothing has changed. For some time now, they have been seeing their business building slowly and gradually. For some time, they've been in the mode of strictly matching assets and liabilities. When they get an asset, which is a contract to move boxes through the supply chain, they'll take on a liability, a lease liability. So earlier in the year, when the financial markets seemed to be getting a lot more excited by recoveries, it didn't impact their business. They weren't running out and leasing more space at that time just because of the financial markets. Today, that there are some concerns in Europe over Greece, over Spain. You hear news of South Korea. It's not impacting their business either. They're seeing demand building slowly. They're building their businesses slowly. So to that extent, it's really been no change.
Mm-hmm. And another market that's key for A&B, and one of the areas where A&B is really one of the few REITs that are there, is China. What's going on in that market?
There again, there's been a lot of talk about a real estate bubble in China. And first, need to point out, there is no real estate bubble in industrial in China. It's really more residential. Industrial sort of fundamentals, rents are just getting back to where they were sort of the pre-crisis. There are some long-term fundamental things that are happening in China with respect to the supply chain. First of all, the economy is still growing by anybody's measure 8 to 10%. Retail sales, consumer purchases are up, 15% or so. To put it in perspective, the supply chain is just catching up with the tremendous demand in China. One of the metrics we like to use, because we're here in Chicago, is the country of China with 1.4 billion people has an entire Class A warehouse stock. About 1/3 of that is Chicago. So there are some fundamentals here that are going on. The other thing is that if there were to be a correction in residential prices, it's a little bit hazardous to take the U.S. mindset and transplant it over to China. The housing crisis we had in the U.S. was really driven by excess borrowing that was through the system. A lot of the housing prices increase in China are being driven by excess savings. So even though you get a correction in pricing, I don't know that it'll have the same effect on consumer behavior that we might see in the U.S.
And the other side of your responsibilities is the private capital side. What are you hearing there from your investors?
Sure. Private capital, there's a lot of interest in private capital to come into real estate. Now, this is more core real estate. This is capital coming out of pension funds, out of life companies, out of institutions. It's looking for primarily Class A real estate in the best locations, good product, good lease terms, and all of that. It's more of a defensive nature. It's capital that's looking for a real sort of 8 to 10% return without a lot of risk. And that capital is building and coming into the market. There is a smaller group of investors who are looking for more enhanced returns, maybe more emerging market type of capital. The place they're looking most right now is Brazil, and I would say second on their list would be China. A couple years ago, you would have put India on that list. That's fallen off a little bit, I think, in the investor's mind.
Guy, thank you very much for joining us.
Thank you.
For more on REIT Week 2010, be sure to visit REIT.com.